Good afternoon, and welcome to today's webinar presented by Synoptic. Today, we'll cover the top trends, opportunities, and risks facing financial services institutions. The emerging connected world and digital transformation is at the center of business strategy for financial services organizations. But this transformation requires people, process, and technology to achieve business success. I should mention that this is one of a series of webinars that Synoptic produces on an ongoing basis. We'd like to take the opportunity to share our observations of current technology and business developments that are cut across all segments of the financial services industry. We also get input and analysis from our team of financial services experts internally, and we also share anecdotal experiences and feedback that we receive from our portfolio of financial services clients. My name is NYCRR, and I'm glad to be leading the conversation for this webinar. I'm also extremely pleased to be joined by my colleague, Jeff Pagano, who is the Chief Technology Officer for the Eastern region of Synoptic. Jeff, maybe a few words on your background and what you'd like to get out of this conversation?
Sure, thanks, Nick. I'm really excited to be here as well, speaking to everybody and helping them plan for the future. And as regional CTO for Synoptic, that's what I do. Aside from leading service delivery teams, making sure that our customers are receiving maximum value from Synoptic Managed Services, I help bring insight, advice, and kind of the strategic guidance to ensure that our clients' businesses are really aligned with their IT strategy going forward. We feel that this is a huge value add for Synoptic Managed Services customers and a real strategic differentiator for Synoptic in the marketplace of other MSPs. I'm looking forward again just to highlighting how some of our products and services can really help customers get ready for the next phase of what's going on with the cloud, how do we stay ahead of the cybersecurity game, and everything we need to do to ensure we've got a solid foundation and you can meet your compliance requirements as well.
Hey, Jeff, thanks a lot. And as Eastern Regional Manager for Synoptic, I'm really fortunate to have you on the team, and I'm sure folks that listen in will get a great deal of your expertise and the value that you lend to this type of dialogue.
Great, glad to be here.
We're going to cover a lot of ground in a very short period of time. I think Jeff and I both decided to stay extremely focused on what we define as people, process, and technology, and how Synoptic has a view about what's going on in the industry. We're going to start with some trends that are both business and technology driven. Take a quick look at some of the regulatory compliance developments that are going to characterize the next 18 months. But as Jeff alluded to, we'll spend a good deal of time focused on cloud technology as well as cybersecurity. And we hope at the end of this conversation you have a clear view of what our perspective is on these two areas and how they impact the financial services industry. So I think 2017 and probably over the course of the next 12 or 18 months are going to be, well, not a definitive period in time, but certainly a much different and extremely unpredictable period of time in this environment. I don't think it's any secret that there is extreme volatility in many political systems across the globe, from Brexit to the U.S. election in November, to the pending presidential elections in June in France and later on this summer in Germany, as well as many of the other hotspots that you're all too familiar with that get reported on a daily basis. From a economic political perspective, a lot of volatility, a lot of uncertainty that needs to be considered, and no other industry probably is impacted by those headwinds than this industry that services the financial services sector. That said, in the U.S. alone, we have what I would define as a favorable interest rate environment. Rates are starting to rise. Lending profitability by banks is creeping up. And certainly the Fed has proven over time they know how to manage interest rates in the face of a lot of political and economic uncertainty. But the headwinds are strong, with the possible exception of the GDP for Q1, which is an anemic 0.7%. Subsequent prior quarters have been healthy, and the predictions for the uptick in the economy over the course of the next year are pretty positive. In addition to kind of the broad economic measures that characterize the market, we believe some traditional factors and will continue to persist. Clearly, the fintech influence over the fintech industry will continue as they push banks and financial service institutions to continue to innovate and collaborate and change the landscape of how banking products and financial services products get brought to the market. In addition to FinServe, the strong merger and acquisition activity that characterized the latter part of 2016 will continue to persist into 2017, well into the third, perhaps fourth quarter of this year. And finally, I don't think it's any secret, again, that U.S. trade policies are a little bit volatile and, again, subject to great change. We've seen the withdrawal of the U.S. from the TPP, Trans-Pacific Partnership. The NAFTA negotiations look like they're going to move forward with us, the U.S. certainly renegotiating that contract and that pact. And other international and domestic trade pacts will be, again, subject to ongoing review and revision. So we thought it made sense to take a quick look at some of the macro trends that some of the consulting firms and advisory companies have put together for this year. I'm going to share with you several of these. First is a kind of a broader view of what is out there in terms of some of the banking challenges. You'll see that the number one concern is how to satisfy demanding customers by retaining their loyalty and added wallet share. And I'm not going to go through each one of these particular drivers, but I think it's interesting to see how customer-facing relationships are the main drivers for some of the challenges that many of the FinServes are talking about characterizing their strategies this year and next. But I do say there's a business component and a technology component. At the very bottom, you see IT modernization. Jeff and I are going to talk a little bit about how that impacts technology investments and technology strategies going forward. But this is a kind of an overall broad-based view of what many experts believe are going to characterize this market over the next 12, 18 months. Here's another view. I think there's some reciprocity and similarity between the prior one. Most notably, the number one trend is removing friction from the customer journey. Again, how do banks make the customer experience more meaningful, more seamless, more valuable? It's no secret that banking relationships from the consumer perspective have been fraught with doubt, uncertainty, and a lot of frustration over the years. This cut of the trends is a little more technology focused, so you'll see some talk about open APIs, some discussion around payments, and of course, as always, the requirement to respond to regulatory changes and requirements. So this will be available on the deck that we provided on our website. Please take a look. And finally, another view of what trends are out there. This is, quite frankly, a much more technology-focused chart. I'm not going to go through each one of these drivers, but I would ask you to point your attention to the two circles on the lower right-hand side, which relate to cybersecurity and the adoption of public cloud services as they provide flexibility and agility. So Jeff and I are going to talk a little bit more about those two areas of concentration, but we just wanted to draw your attention to the fact that they are one of many trends that challenge the banking community at this point in time. As I mentioned, we're going to take a quick look at the regulatory environment. We all know how what a critical role regulatory agencies have and the impact they have on the conduct of banking and financial services. Obviously, with Republicans in charge, We're getting it after the first 100 days of the new administration. We're getting a bit of a feel for what their view is going to be. Clearly we've seen more deregulation discussion than regulatory enhancements or higher bars, particularly as it relates to Dodd-Frank, for instance, where there's I think a marked drive to restructure that legislation and deregulate it a bit based on where it has been over the last 7 or 8 years. But it's not just Dodd-Frank. There are a great deal of focus around culture and risk management and sales practices. The government is quite focused on having institutions build governance frameworks which really institutionalize culture, risk management, and conduct of their staff. So I think you'll see in the next slide a reference to that, but some of the trends indicate that these types of governance frameworks are going to be uppermost on the mind of many of the regulatory bodies moving forward. No surprise, and we'll drive into this a little bit more further into the conversation, but cybersecurity and IP protection have a disproportionate amount of attention by the regulatory agencies at this point in time. And despite discussions around potential deregulation, the need for increased capital allocation requirements to strengthen the balance sheets of all financial services institutions industry-wide will continue unabated. And there'll be a lot of discussion around that in a separate forum, but I think our view is that the capital allocation requirements are going to be extremely stringent going forward. And then finally, and just an obvious statement that the regulatory agenda, in many and in fact most cases, drive IT strategy and IT investment. And I'll allude to that as we move forward in this discussion. So this next slide, with apologies, is a bit busy. I leave that there for your reference, but I would point your direction again to the top 2 bars that discuss governance and risk management and culture and ethics. That just reinforces and embellishes the point I made in the previous slide around the need to develop frameworks which institutionalize and manage risk and promote a culture of risk avoidance, risk management, and transparency. The rest of the slide speaks to individual initiatives that we think are going to get a fair amount of discussion and perhaps implementation. I direct your attention to cyber threats as one area. Again, credit quality concerns speak to the discussion around capital allocation. But you can get a better sense of the full breadth and depth of the regulatory agenda for the next several months and into 2018 with this slide. So as I mentioned before, the regulatory agenda drives IT strategy and spending. I don't think it's any surprise that over the recent years, with the tacit acceptance by the regulators of cloud technology, there has been a great deal of increase and more importantly, investment in cloud technology. Jeff and I will get a little more detail around that in a few minutes. But we also took a look, in addition to cloud, what some of the buckets are, what some of the spending strategies and the budgetary investments are for major financial service institutions for 2017. I don't think it's any surprise that on a general level, 50% or more of spend is allocated toward maintenance of ongoing operations, operation expenses, maintenance of existing systems and technology. And the other 50% are split primarily between big data initiatives and cloud initiatives. I will say, however, that for all the attention cybersecurity gets, it's a very small percentage of the overall spend, anywhere between 5 and 12%, depending on the asset size of the bank. So when we talk about cyber and see the slides, please keep in mind that while there's a lot of attention at very senior levels, the funding just has not been there historically. Banks also continue to innovate around how they deliver their products to the clients, institutional, corporate, and consumer, end-to-end digital platforms to deliver these services to make it much more seamless and integrated. And at the end of the day, more affordable has received a lot of attention. Again, in terms of looking at core systems, we talked about that 50% spend for maintenance of existing systems. Well, many of those systems are getting old. and less important. So there's a drive to outsource those types of systems to managed services providers or other third parties. So system staff and technology staff can be redirected towards more strategic projects that have a higher revenue per employee impact. So that trend will continue and will probably pick up over time. In addition to the outsourcing of core applications, there's been also tacit recognition across the industry that many of the process re-engineering efforts that characterize the last 10 years have not really succeeded in driving wholesale efficiencies and the attendant cost reductions that were expected. Most banks are stepping back now and either outsourcing a lot of those processes to BPR firms or looking at new technologies like robotic process automation to take another look at how home processes can be re-engineered and made more efficient. So RPA, or robotic process automation, is a theme and a term you'll be hearing more of going forward. Again, cybersecurity is top of mind, and we'll talk a little more about that, as I said before, shortly. And then finally, and to nobody's surprise, bleeding edge technology is becoming mainstream. So the technology around the Internet of Things, around blockchain technology and Bitcoins, as well as cognitive technologies that were just 3 or 4 years ago more lab work or experimental R&D, are becoming more and more part of the technology landscape over time. A lot of that has been influenced and driven by the fintech ecosystem, but nonetheless, a lot of those technologies are coming online and should have an interesting impact on what banking services and product look like over the next 3 to 5 years. So some comments about the cloud market. Many experts call this the second wave of the cloud market, where investment in cloud technology, public, private, hybrid, is really accelerating to the point where across the global FI market, it's going to top $75 billion this year and will grow at 23% compound annual growth rate over the next 5 years. So it's just an amazing evolution of a technology that, again, 5 to 7 years ago was really not well known and not really well understood. This is an area where entire technology organizations, legacy systems are going to be migrating and have started to migrate, and nowhere is that going to be more evident, more prevalent than the financial services. One of the reasons for that is because cloud platforms, as I mentioned before, with the consent of regulatory bodies, but also technology executives and banking leaders, now considered to be a viable platform to run core ops systems. And as far as the states, there's a lot of interest. Everybody's getting into the game. And you can see some numbers here that indicate that private clouds and public clouds and hybrid clouds are receiving a lot of attention and a lot of participation. In addition to the large numbers of financial services companies that are moving in this direction, once you get there, you're going to have to make some changes or discussions around what you want to do, whether you want to sit in a private cloud or a public cloud. Many firms that are running private clouds recognize that it's an awful lot of work. It's a challenge. It chews up cost expenses and takes people away from being productive. So again, there's been not only a drive to cloud platforms, but also a migration off of private clouds into public cloud services. And Jeff, I think, maybe some view from you around if you either you have cloud services or you're thinking about migrating to the cloud. And there's some best practices that I think some firms should think about. And maybe you could lend your perspective on your thoughts and your experience and some of the things you're hearing in the marketplace.
Sure, Nick, thanks. And yeah, that's well said. I think it may be increasingly well understood, right, that cloud is moving out of that first mover phase of adoption and really more into the into the mainstream, right? Or as you pointed out, even regulatory bodies are accepting and adjusting their stated policies with regard to cloud service providers or software as a service type applications. So in making these kinds of determinations for our customers today, it's incredibly important to kind of get a 360 review of what does the business need, what's critical, and does the cloud really align with these business requirements. Just because it's becoming mainstream doesn't mean it's right for every organization. We want to study very carefully the requirement, understand every angle and expense before making a recommendation. So with that, with more customers requesting, that kind of rigorous analysis, we at Synoptic spun up and developed a service simply called the Cloud Assessment Project. This is a very rigorous, in-depth analysis of not only your infrastructure but your business operations to ensure that basically you are fully equipped and ready to move to the cloud and that it makes sense. So it's really designed to answer a few key questions when considering a move to the cloud, right? First of all, cost. And of course, economics are always important, if not the primary driver. Costs with these public cloud providers today, Amazon, Google, Microsoft Azure service, they are highly variable. They can change month to month. This is different for a lot of organizations. So number one is, what does your spend truly look like? We have a tool, great tool that sits in your infrastructure. We let it run for 2 weeks. It absorbs everything about how your organization is consuming IT and what that would look like at Amazon AWS. What would that look like at Microsoft Azure, right? So you're going to get a full sense of your infrastructure today and what the spend might look like at these big cloud providers. Economics is just one indicator, of course, of an overall cloud strategy. Application performance, application compatibility. Again, we're looking at the software that's running on there and measuring that against any known compatibility issues with these cloud providers. We're examining things like network throughput. How is your bandwidth competing? How is that going to compare up there? So again, this process is designed to eliminate those ambiguities, reduce the variables to the extent where this becomes much more of a known quantity. We deliver a report after that cloud assessment has collected its data. Our professional service engineers have had a time to digest it, analyze it, and give a presentation to you. Again, they will work with you in looking at your business operations kind of holistically, and they'll compile that with the automated report to give you a really fully baked sense of how this would look if your organization were to adopt the cloud, and most importantly, which cloud is really right for you. There are private, hybrid, and public models, each with their own caveats. This assessment is really designed to flesh out all those ambiguities and variables and give you a recommendation based on data. So again, that's the Cloud Assessment Service from Synoptic, a very popular service that was just spun up a few months ago. It is a very straightforward thing. It requires very little effort on your part to get going and to complete, but it produces incredible and incredibly insightful data about how your organization can make the most of the cloud services that are out there today.
Yes, thank you. Very insightful, and your observations are much appreciated. So the other area that we wanted to chat a bit about was cybersecurity. And it is, as I mentioned here, the landscape is becoming ever more dangerous. If you think of ransomware, again, another phenomenon that just a few short years ago was unknown or just a minor concern on the part of experts in this area. Yet today, most attacks are ransomware-enabled. So it's a highly evolving landscape out there. The threat factors are increasing daily. The bad actors are becoming more numerous and more sophisticated. And quite frankly, certainly in the financial service industry, the attack zones or the victims or the targets have not really kept pace with the attacks. No longer, as you all know, is just the network at risk, but the entire enterprise. Applications, either vendor-specific or internal applications, are being targeted, being infiltrated, and being captured and held ransom. As I alluded to earlier, funding for almost any institution at a corporate or enterprise level is nowhere near what it needs to be, in our opinion and the opinion of most experts in this field. The talent pool that would be used to staff these areas, or security operations centers, or security incident management centers, is shrinking because there's just not enough demand for them in the banks. However, there's an inordinate amount of demand for this talent in every other sector, both public and governmental, across the country. So talent pool is not what it needs to be. In addition to a full frontal attack, the hacks and the bad actors are now using third parties and supply chains to get into enterprise level networks and data. So it's not just coming directly from an attacker anymore. It's coming through your supply chain, through your third parties. The entire, as I said before, the entire enterprise is at risk from a multiple different vectors. As a result, you've seen a lot of regulation coming out of the federal government, and as we'll see in a few minutes, that initiative is being taken on by the state. So now both state and federal regulatory pressures are afoot to ensure that institutions have built up sophisticated cybersecurity teams and are using the right tools, resources, and vendors to secure their environments. Finally, just a few closing comments about this particular space. Cyberspace is growing, and it's consolidation and shakeout hasn't occurred yet, so there's a lot of contenders and pretenders. I think our view is to make sure that you're working with a reputable cybersecurity company that has bona fides in this area, and you're not dealing with what I'll call a contender or a firm that was just built to do a very specific service and may not be around over the long haul. And finally, and perhaps most importantly, it's our experience that cybersecurity is a cultural phenomenon. It is not a technology problem. It is not a people problem. It is not a process challenge. At the end of the day, it has to be part of your culture. If you want a secure culture, that's to emanate from the top, from the very top, from the board of directors to the CEO, all the way through the staff. So cyber training, cyber awareness, cyber expectations, strong security information officers, all need to be part of an overall corporate organizational commitment to maintaining a secure company.
Nick, if I could just hop in for one quick minute. Yeah.
Absolutely.
Two thoughts for the audience here, right? We've got a couple favorite things on how we think about and how we approach cybersecurity with our customers. Number one, it's not a technology issue, it's a business issue. We measure, or we try to communicate the risks of cybersecurity, not in terms of technology, of course, or any of that, but as essentially ROI. You could think of it with that term, although this has a different acronym. The results of a breach or a cybersecurity incident are going to be ROI, reputational, operational, or intellectual property. One of those things is going to take a hit, or all three could potentially take a hit in the risk of a cybersecurity. So that's going to have economic ramifications for firms that are affected by cybersecurity. And we try to help our customers focus on that rather than the technology that goes into it, right? The next piece I just want to say really quickly is that with a lot of vendors, what we're seeing in the marketplace is that they will lead with these very flashy, very expensive cybersecurity solutions, right? You're going to see, solutions like penetration testing, right, or vulnerability scanning, and these can run into tens or hundreds of thousands of dollars, and there's a time and a place for that stuff. Synoptic leads with governance, and I think that speaks directly to what you were talking about, Nick, okay?
Yes, it does.
Without the right governance, without the right policies in place, all of these vulnerability scans, penetration tests don't mean a thing. We want to make sure your company is set up to behave in a secure way first. The people and the process come first, the technology comes second. With that, Nick, back to you.
Hey, Jeff, thank you. It's a great segue for this particular topic. It's no secret, as I've alluded to, and I'll mention it again, that this industry is highly vulnerable. We looked at 3 reputable, nationwide, highly regarded reports. The Verizon Data Breach Investigations Report says very quantitatively that FinServ is the most breach industry in the private economy, 3x more than any other industry vertical. And I mean, obviously, as the old saying goes, that's where the money is, but nonetheless, it is the most vulnerable and highly targeted industry sector. The IBM Cybersecurity Intelligence Index cites that FIs are subject to 36% more security events than any other vertical in 2016, and they do not expect that trend to reverse itself over the next year or so. So, you know, highly reputable firms that publish these reports clearly indicate that the financial services industry is vulnerable, is highly targeted, and quite frankly not doing very well. And that comment is backed up by the financial institution security scorecard, which indicates, if you just take a look at the top 20 commercial banks, their performance and their findings. And you really can't find any good news here. I'll spare you going through each of the events here, but the 2 that stand out to me most are the last 2, where over 400 malware events were detected at just one top bank last year. And a total of 788 malware events were recorded and detected at all top 20 banks in 2016. Now, that's frightening enough, but when you consider that these are the banks that, quite frankly, have the most sophisticated cybersecurity units, they get the most funding per capita of any financial services institution in the industry, that's a pretty sobering statistic. So I just wanted to draw your attention to the fact that you know, the industry itself is vulnerable, and it takes a lot of work to reverse that trend, and we don't see that happening anytime soon. Any comments there in terms of your perception of what these facts and statistics indicate?
No, I'm sorry, Nick, you just broke up there for 1 second. Can you repeat the question for me?
I just wanted your comments, any observations you may have on these statistics that are in the slide here.
No, not really. I mean, I think that there are a lot of statistics out there, and all of them more shocking than the next, right? One of my favorites that stuck out to me was something like the FBI reported that of all the malware or cybersecurity incidents that they measured in 2016, something like 81%, or a very startlingly high figure, was reported that these were all traced back to insider threats, right? So we think of cybersecurity as protecting ourselves from other people out there. Most, if not many, if not most of these events are actually perpetrated by inside actors, which is another major theme that we see in the market today. But I think that's a whole other topic. Nick, go ahead.
Yeah, great point, and we often overlook the insider threat that persists at every institution, and not just in FinServ, but across all our industries. So in response to this kind of bleak and increasingly dangerous environment, a lot of individual states have started to take a look at creating legislation which would compel banks that are under their state charters to aggressively amp up or improve their cybersecurity organizations. New York State is the first state to take such action. That legislation takes effect in August of this year. But I'll be frank with you, our people say that it's a model that's going to be replicated and used in other states. We already know that in legislatures in California, Illinois, North Carolina, Connecticut, and several other New England states are considering this legislation. So, what happens in New York is going to influence legislation across all other states. And very specifically, you can see here some of the hurdles that the New York State Bank is going to be required to meet. But most importantly, by February of next year, the certificate of compliance has to be registered with the New York State Department of Banking. And just a few weeks later, certain hurdles have to be met around pen tests, risk assessments, multi-factor authentication, and internal cyber training and awareness programs. So for the only firms that are exempt from this mandate in New York are financial services organizations that have less than 10 people and less than $500 million in assets. If you have more than 10 people in your organization, you will be subjected to and regulated by this legislation. So I think it's a good barometer. It's something that's near term. It provides a view of what governmental agencies, both at the federal and state levels, are looking at and what the mandate's going to be to satisfy those regulations. I've also included a link for you to go to if you'd like more information and background on the actual legislation itself. So, and Jeff, feel free on this particular slide to jump in wherever, but what do? How do you respond? How do you mitigate your risk? And what type of considerations do you have as you go about, running your business? You can't paralyze the firm. You cannot hold everything hostage to, cybersecurity operations. How do you begin to, as Jeff said, get to the point where your ROI is protected, and at the same time you can earn a profit? So we evangelize that some of the following actions and approaches and postures are things that should be considered. For instance, when you're developing your anti-fraud, AML projects or efforts, make sure there's a component for cybersecurity and do that up front. Get ahead of the legislation. We just saw the New York State legislation. Get ahead of that legislation and don't be forced to and mandated to put together cyber organizations and do pen tests and do your assessments. Get ahead of that process now and begin that process. Another area that we harken back to at the beginning of the conversation is when you develop your governance frameworks and oversight functions, separate them from cyber operations so the two don't conflict. In fact, one controls the other. The governance frameworks control and monitor your cyber operations, and the two are kept separately. Again, we mentioned the risk from your supply chain and third parties. And finally, as you begin your product and service development efforts, ensure that cybersecurity considerations are factored in at the very beginning. The design of these products have a component around security. Not just security, but cybersecurity, network security, and whatever authentication risk and encryption risk that you need, however you protect your overall data, should all be factored into the development and design of these particular products. So, Jeff, I'm going to kind of leave it there and ask for you to comment a little bit about and kind of embellish some of the comments you made about how we can help. And some of the areas that inside the financial services institution we can help play a role. Whether we focus today on the cloud and cybersecurity, they're not the only imperatives that face banks from a business and technology perspective. So kind of just your view of how we can help and some of the areas that we think merit our attention.
Sure, of course. Thanks, Nick. Happy to comment. So when you really get into these compliance requirements, if you've ever looked at the documentations in any great detail, you'll find one thing: they're boring. They are actually quite tedious. A lot of them refer to processes, right, and training that you have to provide. It's all very rote stuff. So to me, it's a focus on the fundamentals of sound management, really, and whether that's technology or with anything, it's really about management. It's about making sure things are taken care of in a very systematic, holistic way that's highly repeatable and highly scalable for your business. So Synoptic excels at bringing that IT management and leadership, and that really provides the foundation of everything that comes after, right? Between your IT operation up through these compliance requirements. If all the little things are being looked after, you're already more than halfway home to winning sort of the compliance battle. But you have to have a partner, right, that you have full trust in, that can also verify that these little things are being looked after and taken care of. Synoptic is that partner. So whether it's the IT leadership, just the maintenance, all the little things that go into compliance, we take care of that for you. You don't have to worry about it. We have a flagship offering is what's known as just IT as a service, or ITaaS, right? This is a holistic, very easy to digest program, 3 or 4 pricing categories that you need to be concerned with, and that's it. From that flagship foundational service offering, right, then come the more advanced things like cloud assessment, like virtual CISO or virtual Chief Information Security Officer. Like Nick said, totally separate arm, should actually dictate and drive what the IT operational arm is doing. That gets layered in. Security management, application management, other pieces, right, that we can provide to help leverage any limited IT resources that you may have, or provide holistically if you don't have any IT resources. But again, I'll just emphasize that a lot of these compliance questions are really, they start with the fundamentals, right? Make sure you're managing them. Make sure your partner is verifying all these little things are taken care of before you get into the advanced cybersecurity stuff. They work in conjunction with one another, and you can't have one without the other. So I think that covers it, Nick.
Thank you, Jeff, and thanks for your time and insights today. That just about wraps up this conversation. Feel free to replay the webinar when appropriate. Also, feel free to browse our website, synoptic.com, for some more information, white papers, a lot of critical background on some of the topics we talked about today, and probably more importantly, how Synoptic fits in with the financial services industry and what we can do to help our clients and prospects. So thank you for your time today. It was a pleasure, and hopefully you'll enjoy the content. Take care.